Hey folks, welcome back. This is our weekend commentary for the ICT mentorship. And there will not be a video this Sunday because I'm doing it tonight. I need a couple days rest. I've been spending a lot of time in the emails and doing a lot of video work, so I have to enjoy my rest. We will be just briefly commenting on what's already taken place and what I think might be happening next. But just take it with a grain of salt. It is the doldrums of summer, so I could be wrong. Okay, so don't take what I'm about to say and say, oh, that's it, I'm going in, all in. Don't do that, okay? All right, so we see the dollar index here is our daily chart. And the market's traded up into our volume imbalance and not quite closed it in yet. We have relative equal highs. And it looks to me like we're probably going to challenge that high. The reason why I'm saying that is because we've consolidated in here, and every time we've come down, we're rebalancing or coming back into an order block, and it just seems like it's building up momentum, really, pent up momentum that will be released probably on this high here. I don't see it topping like this. I mean, it obviously can make me look like a fool and do so, but it doesn't look like it's making an attempt to form a top. So it looks like it might release on the upside. And I like the idea of it coming up above here, finding some support here at the premium high of the volume imbalance, and then making a mad dash for this high. So that's what we're looking for. Otherwise, it's probably going to stay in a range here, and that range would be defined by this low and the premium high that's yet to be traded to yet. Hourly chart on the dollar index. Okay, you can see we've pretty much been consolidating after we've taken out the sell side liquidity here. We pressed up, rallied up into all of this run down in here. Consolidated once more. Relative equal lows in here. I thought that we might sweep below that, but it didn't do that. It actually created a SMT divergence. Again, is another reason why I favor the upside run on buy side liquidity for dollar index, because dollar was unable to make that lower low when euro dollar made a higher high. We traded back down into this buy side imbalance, sell side inefficiency, and we should, by all indications here, it looks like it's just winding up for a pop to the upside. So do we get that run up there and then completely reverse, or does it accelerate on the upside? I don't know, because technically a bullish dollar in here is against its normal seasonal tendency. Now, I'm not stating that what we're in globally and economically is normal, because it's not. There's all kinds of manipulation going on, and it's off the charts. So it makes summer doldrum trading even harder than it normally is, because usually I can find some pretty good swings even in the summer. This here is proving to be a little bit more trickier than normal. So yesterday you saw me take 2 trades, and I had to finesse myself out of both of them. And while I did offer pips, it was my failure to engage those opportunities when it was making it available. I wasn't in front of the charts. So looking at it right now, I would favor upside on the dollar because of the SMT divergence here on the hourly chart. And you'll compare these relative equal lows with the higher high formed on this specific candle right there. Look at your hourly euro, and we'll mention it when we get to euro. It actually creates the higher high in euro, but not the lower low in dollar. That's SMT divergence, indicating that the dollar was unwilling to make the lower low, showing relative strength. So it should press higher, in my opinion. 15-minute time frame, again, keeping things real simple, not a whole lot of lipstick on the chart. Just consolidation all day today, nothing real exciting. But I think we'll probably press up into that old high on the daily chart going into next week. What violates that idea? If we trade below this fair value gap right there. Because if we take out this low and we completely close in this and go below it, We have South liquidity here, imbalance, fair value gap, and the liquidity resting below here. So I would not be so bullish if we take out this. I'm not thinking we're going to go down here, clean up this, and then reverse go higher. I don't think that. I'm thinking if it goes below here, it's going to go below here, and then come back in, and then try to work out these areas in here, and maybe work in this breaker. Low, high, lower low, up close candle. So it's better for it to stay, if it's going to remain bullish, stay above this fair value gap. Moving on into euro dollar versus British pound. We're looking at the 1 hour chart here. Just to keep things simple and short. These relative equal lows, I mentioned that in the past few commentaries. I'm not exactly sure what day it was, but I said we would probably end up sweeping down below that. We did. We saw it through it, came back above. Market structure shift here on this high. There. Deep retracement back down into the order block. Optimal trade entry inside of an area below old lows. Market trades higher. Rebalances at order block. All the buy side imbalance, sell side inefficiency. Rebalance there. Rallies once more. And jagged decline once. Going back into this area. That makes the euro dollar relatively stronger than that of cable. Okay, so what I mean by that is if euro pound is likely to go higher, the first thing we're looking for is, okay, the dollar index is consolidating. That's the only reason why we're referring to this pair. So by looking at this pair, it shows that euro pound is in an oversold condition. We're in an area where sell side liquidity has been taken. We had a market structure shift here, and we dropped once more into the order block, rallied, order block, rebalance, rallied once more, and then another jagged decline back at the old lows. So that indicates what? Relative strength in euro. But is euro really bullish? No. So that tells you what? It tells you that the cable market, or pound versus dollar, is the better sell. But we don't necessarily need to see that British pound chart to see that, because we can see it in the euro chart versus the pound. All right, euro dollar daily chart. You can see consolidation hanging around inside the propulsion block. I do think we're probably going to end up trading through that and attacking the sell side liquidity here. It may even run for the sell side liquidity over here. Cable looks even better for a run below its relative equal lows back at these same respective dates. But what changes that if we trade above this high right there? If we trade above that high, then we'll have to contend with this here. But right now, it just looks like dollar's going to try to press in next week into that old daily high. And that would indicate that we're probably going to work inside the sell side liquidity here. And maybe if things get accelerated, maybe actually attacking this. And that goes against the seasonal tendencies. So again, there might be something else going on behind the scenes. And I'm not so much of a fan of the Fed saying they're going to raise rates in the future. They're not doing it yet. They're just talking about it. So when it's like that, they'll do it when they're going to do it. Okay, and you might be thinking, okay, well, they're pricing it in. I'm not a subscriber of that view. Okay, I just think that there's something else going on, and I don't necessarily need to know exactly what it is. I just know that I need to be cautious. Okay, so I'm not trying to understand everything. I'm not trying to know everything. I'm not trying to be omnipotent. Okay, I'm trying to be observant in terms of what the risks at an elevated level as they are right now, in a time period when it's not likely to give out a lot of strong price moves, because number one, we're in the summer. Two, we're going against seasonal tendencies. So we have two things going against us right there. So why are you trying to push it, or why would you be trying to push it in the marketplace in these conditions? It's better not to do that. So moving on into hourly euro. Again, consolidating the last 2 days here. It's just been real sluggish. So again, that's telling you what? Euro is relatively stronger than cable. based on euro pounds trading and its technicals. So you don't do anything with euro. You move over to British pound, and it's going to be on the sell side of the delivery, not trying to buy it, not trying to do anything other than look for shorts. I like these relative equal lows here with the higher low over here. So this might roll over next week. But right now it's being held in consolidation because dollar's in consolidation. So that means you go to the crosses. The euro pound indicates it's bullish. So it's relatively stronger in euro than it is for cable. So cable's going to have a weaker price chart, and it should have a lot of premium arrays being respected. All right, here's the euro 15-minute time frame again, just highlighting the consolidation. I don't want to put any kind of annotations here because it's just me focusing your attention on the fact that we're in consolidation, which leads to cleaner price action in pound dollar. Okay, pound dollar's trading on the daily chart here. Look at the relative equal lows over here. It looks to me like we had a high, low, retracement, and then now we're seeing displacement on the downside. Same signature we look for all the time here. We had a low with a higher low to the right of it. So we have low resistance liquidity run signatures here. And then if it accelerates, we got it over here as well. Hourly chart on pound. See, we had market trade down, create an optimal trade entry here. Buy side liquidity taken. Trades lower again, right back up into mean threshold of the last up close candle. There. And then displacement on the downside. All this sell side liquidity attacked. And we have that low resistance liquidity run signature here. And from this low to that low there. So even though it's kind of choppy, it's still delivering on the downside, which is what we would expect to see based on our euro pound analysis. And here's the 15-minute time frame. And we had high, low, and then lower low, rally up, taking out buy side liquidity, displacement, fair value gap in the form of a sell side imbalance, buy side inefficiency. Rallies up, optimal trade entry relative to this high, low, here, breaks down, comes back up into the order block, here, trades lower, fair value gap there, and then trades down and makes the low of the day. So in terms of trading, the better structure was in pound dollar, but if you've had a difficult week this week, just know that this is typical. This is what you get in the summertime. If there's a fast market in the summertime, that means that we're going to have a lot of supportive intermarket relationships and analysis concepts providing more data, more intel. We're not getting that right now. So the takeaway is, don't push it hard. Don't try to force trades when they're not there. Don't do a lot of leverage, and keep your trade frequency very, very, very low. And be comfortable with taking time off. This is an ideal month and in August for you to take vacations. The market is generally not conducive for real high probability trading. Yes, the market is moving around, but you have to be much more nimble than you are needed to be in May or in October, those times of the year where it's spring and fall trading. This is why I focus primarily on dragging out the mentorship over a full month when it's in core content, because you have to see these seasonal impacts. If you don't see them, and if you go back and look at all of the content from the previous summers, okay, like go back and look at old discussions, you'll hear me saying these same things. It's not because it's happening right now and I need something to give me an excuse. This is classic ICT jargon where I'm telling you these are the times of the year where you anticipate less trade frequency. You want to expect less precision elements in your analysis. Not that you can't have precision, it just means that you give yourself much more permission than normal to be off, to be not quite on it, because the market itself is not really seeing a lot of interbank flows. And when commerce is not pushing through the foreign exchange market, it's going to create a lot of just sluggish price action. But when we get towards the spring or in the fall, those times of the year is when commerce is really churning globally, and it allows flows to go through the interbank markets, and it creates a lot more opportunities. And that's really, the simplest, fastest definition of why I'm teaching you the way I'm teaching you over an entire calendar year. Not that your mentorship ends in a calendar year, but my point is focusing on a month by month and taking away the things I'm specifically talking about at that given month, at that time of the year. It's important. It's important for you to know that. And also, once you go through another full year, you want to make sure that you have a calendar event, or not a calendar event, but you have a calendar expectation. Not that things must be this way, because you have to be flexible enough to know that, okay, like right now, the dollar should be declining and foreign currencies should be going higher. That's the normal seasonal tendency. It might come in a little bit later than normal. It might require August trading before it actually starts to do what it needs to do. Or it may not even do it at all this year. And that would be what I would probably expect, because everything else is messed up all around the world. So it wouldn't be a shock for that to be occurring. So just know that there's benefits to knowing what seasons in the year, what months, and the characteristics of those times of the year are usually, and understanding there's a deviation from that, like we're seeing now with the dollar. If it continues to rally, that to me indicates what? If it rallies and goes higher than its daily high that I'm calling for, if it trades through that and finds strength, that really underlines the bullishness that dollar would be indicating at that time, because seasonally dollar's weaker going into the fall, whereas right now we have a stronger dollar, and that's flying in the face of normalcy. So that would indicate there would be bigger moves in the coming weeks and months that would be against the normal seasonal tendency. And that takes a little bit of experience. It takes a little bit of just trusting the charts and just going with that and trading what you see, but nonetheless experience. And this is actually a good thing for you to be encountering, because we're moving away from what is normally seen. So now how do you navigate that? How do you engage the marketplace? Well, you have to be very selective in what you're trying to trade, and try not to be overbearing about what your analysis is calling for, or what your opinion of the marketplace is, and try not to impose your will on it. Okay? And that, my friends, is going to be it. Very simple. Trying not to give you too much to work with. I'm not trying to dangle any carrots, because right now I'm practicing what I'm preaching. Have yourself a very safe weekend. Relax, and I'll catch up with you on Monday. Be safe.